why you should be very wary of Bitcoin ETFs, why they could be setting you up to use your money to crash the price of Bitcoin. And Marty's been thinking about that. And the great Marty Hibbs has a
Oh,
theory that just made total sense to me.
all
Let's
right.
hear it, Marty.
I went for a walk today, cleared my brain. So anyway, all along we've been talking about this, you and I kind of put the pieces together a bit today. Now, the main thing is you got to understand, as you know, I don't follow anybody. I don't want to hear anything that's going to warp my thoughts because the bottom line is if I hear information and they go, oh, okay, that makes sense. The problem is it distorts my view. And then I'm just regurgitating other people's thoughts. So I try to put this together from my 35, 40 years experience. And here's what I've got from it. Let me try and explain it as simple as I can and as short as I can. Everybody understands how SLV, GLD, and most ETFs work. And most people you talk to will tell you right away they're basically fake. Fake in the sense that they can be manipulated very easily because the thing that controls the price of the ETF is the amount of money that's thrown at it. Because unlike Bitcoin, there's no limit to futures contracts. I was a commodity futures trader for 35 years, and you can create it out of nothing. You only need a buyer and a seller. So, in other words, there could literally be $1 billion worth of silver contracts sold in one day, probably more than 2 years' supply of silver. The price has crashed by throwing fake money or dollars at it. And if somebody like a JP Morgan or Morgan Stanley or whoever it is, they throw enough money at the price of a futures contract, it will crush it. And that's basically what they do. So you take the
So
same.
so let's to make this very clear.
Yeah,
They don't have to have silver. They're selling you a piece of paper that's based on the spot price of silver. So they say, okay, we're gonna do $1 billion worth of silver, and somebody buys that. And if you go to cash that in, they're not required to send you bars of silver or silver rounds. They can just say, well, we're going to settle the contract in dollars. So they give you dollars.
correct. And
So,
the thing is, if we're looking at the futures contracts, as I said again, there's always bidders below the bar. And when they throw the money at it, all of these bids get hit. Somebody says, I'm going to buy $21 silver. It gets hit. Someone's in there at 20.50, it gets hit. 19.50, it gets hit. All the way down as much money as they throw at it, and it crushes the price. And most people get stopped out because silver contracts are usually traded, they are on leverage. So let's take it a step further now. We take from the silver futures, we go to SLV GLD, which is basically an ETF. But the concept of that ETF is that the guardians of that trust or that ETF are the ones that house and hold your silver. But you have no claim on that silver.
mhm.
It's basically a derivative of the silver market, and they're supposed to have it in stock. Now, there's a lot of controversy about how they hold it. Sometimes they move it from one warehouse to another. Sometimes they use options. Sometimes they use futures contracts. So they don't even really have silver. Now, let's take the same thing and transition over to the new ETF, which is Bitcoin. When Bitcoin came out years ago, everybody remembers Jamie Dimon about it's a scam. It's the biggest thing for money
Hate
laundering.
it. It's criminal. Yeah. Yeah.
So I figured, then they figured, okay, now how can we control this? Because the problem is we both know that it's freedom. If I can send you Bitcoin, you can send me Bitcoin. There's no
Yeah.
banks involved. There's no exchange involved. They can't get their hands on it. So what they did do was start bringing in regulation. And by doing that, what they said is we have these on ramps and off ramps, which are basically exchanges. These ramps get blown up, exchanges go under for whatever reason,
Yeah.
and people go, "Oh, that Bitcoin is so dangerous. It's a scam." No, the organization that handled Bitcoin, the exchanges were regulated or are regulated by the powers that be. So it's not Bitcoin, it's the exchanges that are failing. So let's take it to the next step where they decide to embrace and bring in an ETF based on Bitcoin. Now
They,
what happens is we get billions of dollars flooding into this market. Why? Because all of the major exchanges in the world, all the major brokerage houses will not deal with Bitcoin unless it's regulated because the body won't allow them to. The large brokerage firms are not allowed to trade Bitcoin unless it's a futures contract or now these ETFs. So when the ETF comes out, every working man that has been watching any kind of news about Bitcoin wants to get in on it. Now, I'm not saying they're going to go spend their life savings, but they all want a piece of it. And anybody can buy $100, $200, $500 worth of the ETF that people like BlackRock and all the exchanges. You know who they are, right?
Or Joe Bag of Donuts and his wife Helen can call the manager of their 401k and say, "Hey, why
Some
don't you put 20% of my 401k in this Bitcoin ETF?" So we got Joe Bag of Donuts and Larry Schmendrick and all these people out there. All this money is going to flood in. And
already
they
flooded.
think they're investing in Bitcoin,
Yeah.
but they're not. They're giving their money to Larry Fink and Jamie Dimon, who the Schmendrick out in Street, Illinois, he's not getting any Bitcoin. He's just got a paper contract based on the price of Bitcoin. So
So as we
what does JP Morgan do with all that money?
right.
They
So
buy
what
Bitcoin.
exactly? So they're taking your funds and they are actually purchasing Bitcoin and they are holding it in cold storage wallets. Now you got to ask yourself, the first rule of Bitcoin, as you know, is you have your private keys. In this case, you don't. So
If you don't
ETF,
hold it, you don't own it.
that's right.
Yeah.
So it's my way of thinking that the big banking system, the cartel, the big not even corporations, the big exchanges. And going forward, they're going to create more. There's going to be one for Ethereum. There's going to be
Oh
one with
yeah.
5 or 6 other tokens. They will ravish this, and a tsunami of money is going to go into these instruments. But
So
think of
let's get right to the point. You, Joe Bag of Donuts, and all your little friends out there are dumping your money not into Bitcoin, you're giving it into the custody of JP Morgan and BlackRock. They're going to take in billions, hundreds of billions, if not trillions of these Schmendrick's money, and they're going to buy the Bitcoin and they hold it.
that's right. So
And then what happens next?
okay, so here's the deal, guys. I'm not boohooing it. As a matter of fact, I love it to a degree because if you remember hearing me talk on my own channel or on the crypto viewing channel, I've always said, like, eventually I don't trust any of it. It's all going to fall apart at some time, including crypto. So what I believe is going to happen is we are going to see a massive pump. Why? Because the higher it pumps, the more the average Joe is going to want to get in, and everybody can buy a bit of an ETF. So what happens here is when they've managed to suck 50 or 60 or 70% of all the Bitcoin in circulation out of circulation.
Into their control using your money by investing in the ETF.
They will at that point use the make-believe money that we've seen increase 300% over the past 3 years in the monetary inflation because we've seen the monetary base expand. It costs them nothing. They make it. So they can go in and put 20, 30, 40, 50 trillion dollars if necessary into the market and they can crash the ETF. And then people will start jumping out the window because the ETF will fail because
Well,
they have the Bitcoin and you
they,
won't be able to buy the real Bitcoin.
they hold enough Bitcoin that they could crash Bitcoin if they wanted to.
That's right, they could. So the big question is what happens? Do they destroy Bitcoin or do
They
they maybe
could
decide?
they could let me just get real conspiratorial. Could boy, this would be criminality at a huge scale, but could Jamie Dimon of JP Morgan call up Larry Fink and say, "Hey, I'm going to sell you 50% of my Bitcoin. It's at 52 today. I'm going to sell it to you at 50, 49, 48, 45, 42, 40." And Larry Fink could go, "Hell, well, I'll tell you what, I'll sell you half of my Bitcoin at 50, 48, 42." And the market would just, wow, collapse.
There's the problem, unfortunately. When they get in there, they have the power, they can control it. It's unfortunate. Now, for anyone that's listening, don't, feel like dissing Bitcoin. It's nothing to do with that. But when you get that much power, that much control, it's like if you owned all of Bitcoin, what good is it going to be?
The-
Also, the mining is the other aspect here because once they get that kind of power, that money, you know they're going to start buying up all the mining rigs and the mining, and they're going to compete with that, which means it's no
yeah.
longer probably going to be decentralized. Now, guys,
Some
I know you're going to hate on this and you're going to get a lot of bad comments, but use your brains and think about what they've done in the past and what they could do. Now, having said all of this, I'm on board. I'm very bullish on Bitcoin, and I'm going to take advantage of this move. And everybody that's on here that hasn't really known what we've been doing, are we doing this for YouTube or is this for our own
I
channel?
might put this on YouTube. We'll put it on privately first. We'll put it
Okay.
up for our subscribers and for your, we'll put it up for bullshift2020.com. That's Marty's site, and futureforecastinggroup.com
Yeah.
for a few days, and our subscribers will hear it. And
And
then
for
I'll probably put some of it down on YouTube, some of it out on YouTube. So basically, you'd still invest in an ETF, and you can write it up using your charts and
no,
see.
I'm not investing in an ETF
You're
at
not
all.
going to.
No,
You're going to
no.
invest in real Bitcoin.
I've got
Me too.
Bitcoin.
I mean, I'm a hodler. I buy Bitcoin when it gets to a certain level. I'm going to achieve my life dreams, take it out, buy what I need for those life dream, and just sit back and write a book.
Okay,
So
I do a bit different, as you know. I am a hodler. I have my points where I feel it's time to take profit. You know that. And what I do is I use the exchange to do hedging, which means basically if I get to 55,000, I like it. I might sell one or two Bitcoin at 55,000. Now, if Bitcoin keeps going, I'm not losing money because I basically have locked in my price for two Bitcoin. But if I've got another 8 or 10 Bitcoin, I don't mind if it goes up because I'm losing on two, making on eight. If it goes down in the meantime and I'm correct, and it does correct five, $10,000, I can cash out that paper Bitcoin, take the cash, made a nice fat profit, and I haven't touched my Bitcoin.
yeah. So yeah, the ETFs, that makes sense. Is like, yeah, why didn't we see this? You're all giving these, everybody's going to be giving their money to the ETF companies,
And like it's
BlackRock,
the way it's
and
going,
they are using your money to leverage this.
they are. And again, going forward, this is going to be like a massive win for them because they're going to create every kind of an ETF that can, a basket full of whatever else people will
Yeah.
buy. The FOMO will kick in. And now when you talk about people saying $1 million Bitcoin, I'm thinking like, where do they come up with these prices? And I'm thinking, all right, now it makes a bit of sense. Right? If you've got enough people chasing these ETFs because of the demand for them, because they're backed by Bitcoin, now I could see why it could really get ridiculous. I mean, my charts don't show that, but again, for all the haters out there on YouTube, because if this is being shown, Dick knows. Dick, where did we call the bottom on Bitcoin?
1 year ago, just over a year ago, 17, 18, you said, Dick, I believe the bottom's in. Here we go. We're not in a bull market yet. Now we are in a bull market.
Yeah,
So
that was the first, second week in January,
yeah.
exactly. So, we've been doing okay with it. It's behaving. We're in a full-blown bull market, and it's got a long way to go. It's going to have corrections, choppy up and down, but it's going to go a lot higher. And I think the key now is to know when it is time to pull the pin and get out and transition into some other asset, whether it's property or drugs or whatever.
Martin guitars, artwork,
That's all it is, a transition.
vintage cars. Yeah, something
Anyway,
like
I just thought I'd throw that out there, and Dick suggested we put it on tape. So hey, we're having a fun night. It's late at night, and we're just sitting here talking. So I figured let's do it. Why not?
yeah. Okay, Marty, that's interesting. That really makes sense. Yeah, by getting into the ETFs, you're just giving them money that they can leverage.
But you can still make money on them. We know that, right? In other words, they are going to go up.
Yeah.
But in the end game, you need real Bitcoin, not paper products, because you'll be paid off in paper money, which may be at that time absolutely worthless. It's already lost.
How many of us are going to outsmart Larry Fink and Jamie Dimon? Like them or hate them, they're really smart. They're really powerful. The only guy I know would be my friend Barry Schmeling. He might be able to go toe to toe with him, but yeah. All right, Marty, that's an interesting theory. We'll watch it happen.
You have a great night, Dick.
All right.
Take care.